From ordering takeout to catching a ride, we depend on seamless communication now more than ever. But have you ever stopped to think about the tech that's kind of quietly powering all those interactions?
Yeah, it's pretty fascinating.
That's where Twilio comes in. They're like the backbone of so many apps that we use every single day. But is this innovative company? Is it a smart investment? You send us a stack of research to kind of get the lowdown, and we are so ready to dive in.
Let's do it.
Don't forget to hit that subscribe button so you don't miss out on future deep dives. Okay, let's unpack this.
What's so fascinating about Twilio is they've kind of cleverly positioned themselves as this behind-the-scenes powerhouse. They're not exactly a household name, but yet they're driving essential communication features for some of the biggest companies out there.
Right. So for those who might not be familiar, could you break down what Twilio actually does in a way that, clicks with our everyday experiences?
Okay, so imagine you get a text confirming your food delivery, or you seamlessly hop on a video chat within your favorite social media app, right? Those smooth, integrated experiences are often powered by Twilio. They essentially provide those building blocks, the voice, video, and messaging capabilities that developers can easily just plug into their apps.
So they're like the invisible force making our digital lives run smoother. And they're not just working with small startups either, right? They've got some really impressive names on their client list.
Absolutely. I think Airbnb, Uber, DoorDash, these are major players relying on Twilio to connect with their users in a way that just feels like natural and effortless. What Twilio is doing is called Communications Platform as a Service, or CPaaS. Think of it like this. Instead of each company building their own communication infrastructure, like from scratch, Twilio offers those ready-made solutions that just save a ton of time and resources.
That's a pretty ingenious business model. And their revenue growth really seems to reflect that. I mean, their revenue jumped from just over $1 billion in 2019 to over $4 billion in 2023. But how exactly does this usage-based model, how does that translate into profits?
That's the million-dollar question, isn't it? While Twilio's revenue is skyrocketing, they haven't consistently turned a profit just yet. It's a classic growth versus profitability dilemma.
Okay, so let's dig into that a little bit. They're bringing in tons of revenue, but something's preventing those profits from, actually materializing. So where does that disconnect lie?
To understand this, we need to look at the difference between gross margin and operating margin. Think of gross margin as the profit Twilio makes on each dollar of revenue, like after covering those direct costs of providing their services. They actually have a pretty healthy gross margin, which indicates that their core business is fundamentally sound.
So they're making money on their core product, but those profits are getting, eaten up somewhere along the line.
Exactly. That's where operating margin comes in. It factors in all those other expenses like research and development, sales and marketing, administrative costs, basically everything it takes to kind of keep the lights on and keep the company moving forward. Right now, those expenses are outweighing their gross profit. So that results in an overall operating loss.
So it's not that their core business is flawed or anything. It's more that they're just heavily investing in future growth, hoping those investments eventually pay off in a big way.
Exactly.
Now, speaking of leadership, there's been a recent CEO change, right?
Yeah.
The new CEO stepped up from the CFO role. I feel like that often suggests a heightened focus on the financial side of things.
Yeah, you're right.
So tell me about that.
Yeah, so Khozema Shipchandler took the helm as CEO in early 2024, and his background as CFO means he likely has a really sharp eye on those numbers and will be laser focused on steering the company toward profitability.
There's been some chatter about the previous management team's stock-based compensation. I feel like that can raise some eyebrows in the investment world.
Yeah, definitely.
So what should investors be aware of regarding stock-based compensation?
Stock-based compensation is essentially granting company stock to employees, often as part of their pay package. While it can be a powerful motivator, excessive stock-based compensation can sometimes dilute shareholder value. Think of it like slicing a pie into more and more pieces. Each existing share represents a smaller ownership of the company. It's definitely a factor investors need to consider when they're evaluating a company's overall financial health.
So it's something to watch, but at least Twilio is taking steps to reduce stock-based compensation under this new CEO, which seems like a positive signal.
Yeah.
Now let's dive into the ownership structure a bit. What jumps out at you when we look at who holds the reins at Twilio?
The high institutional ownership is immediately apparent. Major players like Vanguard and BlackRock hold really significant chunks of Twilio stock. Institutional investors like these have teams of analysts rigorously evaluating companies, so their involvement often signals confidence in long-term growth potential.
That's a good sign, for sure. But here's where it gets interesting. The actual management team's insider ownership is relatively low.
Yeah, that's true.
It makes you wonder, doesn't it? If the people running the company don't have much skin in the game, are their interests truly aligned with, those of the shareholders?
It's a valid question. While high institutional ownership can, provide stability, low insider ownership can raise concerns about whether management's motivations align with those of, the investors.
It's definitely something to ponder. Now, before we move on to the SWOT analysis, we want to remind you that analyzing companies like this can be pretty complex. If you're intrigued by this kind of deep dive and want to learn more about evaluating stocks for yourself, definitely check out the Stock Analytics YouTube channel. They break down intricate financial concepts in an easy-to-understand way. While you're there, let them know what stocks you'd like to see them analyze next.
That's a fantastic resource. The more you understand about how companies operate and how to analyze their financials, the better equipped you'll be to make informed investment decisions. So yeah, definitely check them out. Now getting back to Twilio, shall we delve into their SWOT analysis?
Let's do it. Starting with their strengths, what are some of the key advantages that Twilio brings to the table?
Twilio has several compelling strengths. They were pioneers in the CPaaS market, giving them a head start in building brand recognition and establishing those crucial relationships with developers who are key to their success.
That first mover advantage is a huge plus in the tech world, and we know they have that strong reputation among developers. But what about weaknesses? We've already touched on profitability concerns. What other potential roadblocks should investors be aware of?
Their reliance on stock-based compensation, as we discussed, requires close monitoring. They also face inherent vulnerability to economic downturns. If businesses start tightening their belts during, tough times, Twilio's growth could be stifled.
So economic factors could play a significant role in their future. Now let's shift gears to opportunities. Where do you see the potential for Twilio to scale and expand its reach?
The CPaaS market itself is experiencing explosive growth, presenting a vast landscape for Twilio to,
It's fascinating to think about the possibilities. But of course, they also need to be wary of, potential threats on the horizon. What are some of the biggest challenges facing Twilio moving forward?
Competition is a constant pressure in the, dynamic CPaaS market, so staying ahead of the innovation curve is essential for survival. Economic downturns, as we've discussed, could also pose a significant challenge, and they can't afford to ignore the potential impact of changing regulations in the, ever-evolving telecommunications landscape.
So maintaining agility and adaptability will be key. Now, let's switch gears and consider Twilio through the lens of a legendary investor, Warren Buffett. He's known for his value investing approach, which emphasizes strong fundamentals. Does Twilio align with Buffett's investment philosophy?
It's an interesting question. Buffett seeks companies with, a durable competitive advantage, consistent earnings, and a clear path to long-term growth. While Twilio operates in a high-growth market with an understandable business model, their lack of consistent profitability might give a value investor like Buffett pause. He's famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price."
That's classic Buffett wisdom. So while Twilio has undeniable potential, its current financial performance might not fit neatly into a strict value investing framework. But it's also worth noting that they seem to be making a genuine effort to cultivate a positive company culture. Their commitment to diversity and inclusion really stands out.
Absolutely. And it's not just lip service. They're walking the walk, exceeding expectations with diversity, especially in leadership positions. That's a testament to their commitment to building a truly inclusive workplace.
Okay, so we've dissected their business model, financials, and even assessed them from a legendary investor's viewpoint. What's the final verdict on Twilio? Is it a company worth adding to your investment portfolio?
That's the question every potential investor is grappling with, right? Twilio presents an intriguing puzzle. They have this incredible reach in the communication world, and they are poised for growth in a market that's only going to get bigger. But the lack of consistent profitability raises some eyebrows.
Yeah, it's a classic high growth versus profitability kind of conundrum.
Right.
They're betting big on the future, but whether those bets pay off, that remains to be seen.
Precisely. And that's where individual investor research comes in. Dig into their financial statements, read those analyst reports, and just really get a feel for their long-term strategy.
Right.
Does their vision for the future of communication resonate with you? Do you believe they can overcome their profitability hurdles? These are the questions only you can answer.
So we've explored Twilio from all angles, and it's clear they're a company worth watching, very closely. But before we wrap up, we want to remind you to hit that subscribe button so you don't miss any of our upcoming deep dives into, fascinating topics. And remember, the insights that we share here are for educational purposes only, and they are not financial advice.
Right. Always. Always do your own thorough research before making any investment decisions. It's your money, your future, your responsibility.
Exactly. We're here to, spark your curiosity and provide you with those valuable insights. But the ultimate decision of whether or not to invest is entirely up to you. Thanks for joining us on this deep dive into the world of Twilio, and we'll see you next time for another exciting exploration.